I believe everyone can hear me. Good afternoon. And welcome to NMB's third quarter results. For people who don't know me, my name is Faiz. I am the CEO at iTrust Finance. Joining us, we have the whole team of iTrust and NMB. I would like to welcome NMB to give a quick introduction of who are in the senior management team at NMB here.
Thank you so much. So today we have the Chief Finance Officer, Mr. Juma Kimori, as well as the Treasurer, Mr. Aziz Chacha, and from the credit function, we have the Acting Chief Credit Officer, who is Nishad, and I'm the Head of Investor Relations, Yonazi, together with the Investor Relations team. Thank you.
Thank you, Innocent, and welcome all. Without further ado, I'd like to hand over to NMB so we can start this call.
Okay, thank you very much, and good afternoon all. Welcome to our Q3 performance results, and with me, as introduced, I'm Juma Kimori, the CFO of the bank. And the way we have structured the presentation, we will cover the operating environment, but also understanding that there are some new investors and potential investors. Will go through NMB at glance. But again, our MTP, just in terms of recapping on the progress we have made on the execution of our MTP 2025 strategy. But again, we'll also look into the sustainability agenda, which is also an agenda that we drive as a bank. But again, we will look at shareholders' value creation and the financial performance for the quarter ended 30th September 2024. So at this point, let me welcome our Treasurer, Aziz Chacha, to walk us through the operating environment and macros. Aziz?
Yes, thank you. So this is Aziz. I think on the operating environment, it continues to be very accommodative, as you'll see from the slide. Current account deficit getting better, obviously helped by a couple of things, value of exports in some commodities that we've seen prices actually going up. On the import side as well, some commodities we've seen some prices going down. So overall, that helps, our current account. Forex, as you can see, 4.4 months of input cover, that is substantially above the ESC average, which is helpful, and we foresee this getting better as we move towards the end of the year. You'll also see that on the credit side, private sector credit growth, 17%, quite, I'll say strong growth. We continue to see significant demand for credit. So I think now question is how we're prepared to meet that demand, especially on the funding side, as we'll see in the next slides. Inflation very stable at 3%, very much within the authorities' benchmark. And also, of course, GDP forecasted, at 5.4%, which is quite strong, I'll say. The other aspect of the macros on the interest rate side, CBR rate kept at 6%. We've seen uptick in interest rates, obviously, with what is happening globally, rate cuts, across, many central banks around the world. One would hope that perhaps we'll expect a similar move back home. It's a space that we continue to watch. FX rates and FX environments, significant improvement on the FX liquidity side, significant flows coming through the market, through different commodities and agricultural exports. But also we see significant decrease of demand for foreign currency. So I think that is quite helpful, even though, of course, liquidity-wise, we see there's some tightening in the market. But I think banks are having to do what they have to do to manage their balance sheet. Next to that, the next slide, just on the banking sector overview, overall you see 13% year-on-year growth on total assets for the sector. You'll also notice that on the funding side on deposits, 8.4% growth compared to 17% growth on assets. So again, you will see demand for it's another signal of heightened demand for credit. On the other hand, funding is not growing as it should. NPL and some other efficiency ratios better than we last reported, 3.8% on NPL. That's about compared to 5.3 for that we did see the same quarter last year. Cost income ratio also getting better at 47.2. We reported 51.3% previously. Total revenue for the industry 18% growth year-on-year. Profit before tax 35% year-on-year growth, which is quite commendable. And so where we stand, NMB, some of these metrics, of course, we are leading on profitability. We are sitting at second position on deposits, second on loans advances, but also second on total assets. So maybe next, I'll pause there and maybe CFO can take it from there.
Thank you very much, Aziz. So I think the key message is that the operating environment has remained stable and very positive, and as such, NMB has also been able to tap into the opportunities in the market, and we have continued to lead in the market in terms of the profitability. But again, we have been able to a large extent maintain our market share on customers' deposits, total assets, but also in terms of loans and advances. I think for a better record, I think over the last 4 years, we have been at the market share about 22% for both balance sheet, loans and advances, and customer deposits. We have been able to record, total asset of 13 trillion TZS. And to be honest, I think we're doing our best, and we've been able to optimize the balance sheet. Customer deposits have also been growing, and I will cover that much into detail as far as balance sheet is concerned. But I think the other thing that to note, we have now recorded 8.3 million customers account. Our people remain to be diversified in terms of gender. But again, I think given the performance that we have recorded, we have received certain awards, including Employer of the Year, but also the Best Bank Award. But one interesting, we continue to maintain solid credit rating from Moody B1 stable. I think the other thing on this slide is that if you look at our outreach, we have in a bit increased branches, but I think just want to highlight here, we are continuing with our channel optimization program, and we have also even been able to convert some of the service centers into the mini branches. But market share has remained also stable, just as we reported in the first half of the year, 2.7 trillion. I think the other thing to note is that we have been able to grow our agency banking, and in terms of the number of agents across the country, we have now touched 44,000. So it's a good growth that we see, but I think you'll realize that we have been able to optimize our balance sheet, ATM channels. So now we are talking about 700. Previously, I think we reported around 720 thereabout. So overall, we continue to optimize and the channels that we have as a bank. But again, I think it is also important to note, through investment in technology, currently we have around 84% of accounts opened digitally, and 96% of transactions happening outside our branches through the digital channels. The next slide is more of a demonstration of the stable shareholding structure with robust price appreciation. which is pretty much underpinned by our market fundamentals, but also in terms of the performance that we've been recorded, that positions the bank as the top 3 largest listed bank in East Africa, but with a 22 market, or rather contribution to the total market capitalization. And I said already that our market capitalization has remained stable at 2.7. So there has not been much change in terms of the shareholding structure, but the record on the share prices is very much commendable. Just the next slide is on our medium term plan, which comes to an end next year. This is just to recap. Our strategic pillars remain the same, and our key priorities as far as MTP is concerned remain the same, with the aim of transforming customer experience. And I will cover in the next slide in terms of what we have been doing as far as driving loyalty with the mass, but also winning in the SME and agri. We have a slide to demonstrate that. I think the other area that in the next slides we'll also look into on how we have been able to deepen penetration in the wholesale. All these initiatives and strategic thrust are aiming at addressing the issue of diversification, and we'll share with you in the next slides in terms of how we have been able to achieve as such. On the operational efficiency as well, we have a slide to demonstrate what we have been doing as far as risk management. And I think you will notice that, for example, on the credit side, portfolio quality has improved, but we'll also share with you in terms of how we have been able to drive efficiency within the country, or rather within the market, but also even when you compare what we have recorded against region peers, I think it is very commendable. We will also share with you during this presentation in terms of the investment that we continue to make on the technology side that drives quite a number of solutions to address customers' need across the market, and how that has been able to support the bank in terms of driving revenue. Now, to cover those aspects, I think very commendable progress we have made in terms of driving loyalty in mass and core middle segment. And if you look at it from 2019, we have been able to onboard 4.3 million customers to the bank. But I think we have quite a number of activities. So mass account opening continues to be a priority for us as far as financial inclusion, but also in terms of reaching as many as we can. But again, NMB Pesa account, which is a solution for micro lending, continues to be the key priority, and we see good traction with a very good quality, generally. I think the other thing that we're also driving, I talk about agency banking, is very critical for us to reach as many as we can across the country. We have embarked on the rural banking strategy, and we are very much focused on driving penetration into the rural areas through various, channels, including agency banking, but also in terms of banks on a wheel. I think the other bit that we are also doing very well so far is on the group accounts, and we have a proposition for the group, that is Kikundi account, that is very much attractive, and we hope that we're going to get more traction on that, without forgetting diaspora proposition. So as we speak, as I said earlier, we have recorded 8.3 million customers account, cumulative average growth of 16%. This next slide is more of what we have been able to achieve as far as driving penetration on SME and agri segment, just to address the issue of diversification, reducing more reliance on the SWL, and of course the initiatives that we have implemented continues to generate the results that we have been able to record over the last 5 years. So to say, we have seen MSC growing by around 6%, of course touching 782 billion by Q3. cumulative average on agri side of around 49%. I think the other thing to note is that for the agri, the limit as we speak stands at around 1.6 trillion, but we have also recorded an improvement in terms of the quality of agri portfolio, both on wholesale and retail side. The next slide is just to demonstrate the progress we have made in terms of deepening penetration on the wholesale. And you will notice that if you look at it from the 5 years, the portfolio has grown significantly, touching loans and advances touching around 2.70, and then off balance sheet touching 2.2. But interestingly, you will notice that we have been able to also grow customer deposit on the wholesale side, touching 3.3 trillion. Now, all these initiatives that we have highlighted in terms of pan-bank approach, in terms of enhancing capacity, relationship management, continue to be the areas of focus. I think governance continues to be the area of focus for us to ensure that we sustain the growth momentum. So as such, whilst you see that we have recorded solid growth on the loans and advances for the wholesale banking, but we'll also realize that the LDR in that space still on the lower side, which gives an opportunity for the wholesale banking to continue to support retail growth, but also in terms of the managing the sustainable growth within the wholesale segment. I think the NPL as well is a very impressive performance. With that growth that we've recorded in the last 5 years, NPL has reduced to 3.1 as at end of Q3 2024 against 14 levels in 2019. The other aspect as far as our strategic pillars are concerned is operational efficiency. And if you look at the improvement we have made in terms of driving efficiency, clearly is a demonstration that our key strategic initiatives around cost efficiency are working. And as at end of September, we recorded cost to income ratio. Whilst you see that our costs continue to grow in line with what we see in the industry, but still we have been able to drive efficiency with a cost to income ratio of around 37% as at end of September 2024. Now, the next slide is just to share with you. I think if you look at NMB, what we say is that we will always invest in what matters. So our investment in technology is critical. Our investment in people continues to be critical and area of focus. So if we look at this slide, you will see that our deliberate intention to invest in our people in terms of capacity building, you see that the staff ratio against the total cost, staff cost ratio against total cost has been increasing. So if you look at it from 2019, the composition of staff cost to total cost was only 45%. Currently, we closed 2023 by around 54%. Now, if you look at the 9 months composition of staff cost to total cost is around 55%. This is all a demonstration of what we have been doing as far as investment in people is concerned. But you will also notice some KPIs in terms of retention level, around 97.6%. But we have also been able to have internal appointments around 80%. So meaning that we have been investing in our people. People get opportunity to be promoted to higher levels, and they are given opportunity internally compared to the recruitment from outside the organization. And other KPIs are pretty much impressive in terms of employee engagement around 80%, an improvement from 75% in 2019. So that is a demonstration of what we have been doing to our people, and I think people agenda will continue to be an area of focus for us going forward. Now, the next slide is more of technology investment. Investing in technology continues to be an area of focus for us as we aim to reach more people, more customers. So we believe that digital alternative channel are very relevant and continue to be the driver for our success in terms of revenue generation, but also to drive financial inclusion. But again, what we are also working on now with the technological development, we have embarked on the core banking upgrade and to make it fit for purpose so that it can accommodate and sustain the growth momentum that we are making. I think the other initiatives, including the investment on credit system, but also to build on efficiency, we have invested on procure to pay, which is ERP payment system to support cost controls, efficiencies across the organization. I think the other bit is we have also embarked on investment in data, and we believe that data is critical in terms of going forward, in terms of driving the right behavior, understanding customers' needs, addressing their needs on a timely, efficiently, and also in a safety manner. So I think those investments will continue to provide better growth for the bank and sustain our growth momentum going forward. The next slide is more of some of the initiatives or other solutions that fortify our digital leadership in terms of the products that we've been able to launch, solutions that we've been able to launch, cutting across different segments, but most importantly, targeting financial inclusion. So NMB Pesa, which is a findable bank account to drive financial inclusion. I talked about Mshiko Faster, which is a proposition for microlending, Jiweke for retirees, pensioners, but also Spend to Save, Kikundi. All these are aiming at driving financial inclusion, but also, most importantly, to making financial services and solutions more affordable to the majority of Tanzanians. I think the next slide is more what we are doing on the data. I've already covered in terms of what we are doing as far as data is concerned. I think we have set our target to reach level 4, and we are making good progress, both on the data strategy, but again, in terms of execution of data strategy, but we have put in place governance structure, but also what is important is recruiting, employing experts around data, and of course, we have been able to onboard some talents to support us drive data management, data governance, data integrity, and so on going forward. And we believe that once this project comes to an end, we should be able to tap into data analytics to help us to address the real needs of our customers and sustain the growth momentum that we aspire. Now, I think the sustainability agenda continues to be an area of focus for us going forward, and we have started quite a number of activities that we have done. If you look at it from the financial sustainable finance perspective, you recall the Jasiri bond, but last year we also issued Jamii bond. Both were overly subscribed, and we continue good traction in terms of the uptake, in terms of the proceeds deployment. I think that continues to cement our market position, market leadership as far as sustainability agenda is concerned. There are quite a number of initiatives that I would not go into detail one at a time, including sustainable operation, but also our financial inclusion agenda, which is also very critical, and I think I've covered more details on the financial inclusion agenda. I think the other bit is our contribution to the advanced SDGs, and this is pretty much linked to our sustainability agenda and focusing purely on the impacting our community. So we have included in the slide, I will not want to go into the details in terms of some of the key initiatives and examples where we have contributed, but also some initiatives that we are running with to contribute to the community. And we believe that community impact to community, positive impact to community will make this bank a sustainable as we address community challenges going forward. I think maybe I jump into the financial performance. So I think if you look at all slides, you will realize that we have put in some of the recognitions the bank has received from both local and international organizations to recognize the efforts that we have been making as far as sustainability agenda is concerned. On the financial performance side, now, I think what I want to say as a summary here is that we have continued to generate robust revenue as a bank, pretty much driven by net interest income, but again, non-funded income, which have both grown. And as such, we have recorded a total income for the 9 months around 1.2 trillion shillings with a PBT of 687. I think efficiency continues to be, the key there, 37%, I already covered that. What is also very important there is the quality, loan loss ratio, 1.17%. But I think the other thing is return on equity, 28%. We continue to generate solid return to our shareholders. On the balance sheet side, you will notice that we have recorded 12% year-on-year growth on customer deposits against the 19% growth in loans and advances. I think you will realize that our loans continue to grow faster than deposits, same as industry. And as such, you will realize in the detailed financials that we have also been able to grow our borrowings. LDR currently sitting at 94%. This excludes borrowing. Now, if you factor in the borrowing that we have been able to bring in, LDR as at end of September stands at around 81%. I think given the credit appetite in the market, versus the growth in loans and customer deposits, we will continue to prudently bring on the borrowings to support the growth momentum on the asset side. So detailed balance sheet, you will see that our loans and advances, 19% growth, I've already covered that. And you will see that we have a drop in government securities by around 11%. This is a reflection of liquidity position that we have had in the year because we prioritized the growth in loans and advances more. So we had to let go some of the government securities. Customer deposit 12%, and I said borrowings has increased. And you will see in the next slide the impact on that as far as the interest expenses is concerned. I think the next slide is more of the mix of our assets, and you will notice that retail continues to be the significant portion of our balance sheet as far as loans and advances are concerned. But we have recorded a very solid growth in terms of the both wholesale and retail loan book. If you look at the mix as far as total asset is concerned, 65% of our asset is loans and advances, 16 government securities. That gives you around above 80% level of earning asset. I think the other graphs are more of the segments mix in terms of the loans and advances when you compare Q3 2023 and Q3 2024. I think the key message there, you will realize that the personal lending is now sitting at around 59% against what we had last year, 62%. This is a clear reflection of our diversification initiative, the growth that we have recorded on the agri side, the growth that we have recorded on the wholesale side, the growth that we have recorded on the SME continues to dilute that dependency on the personal banking or other personal loans. So currently standing at 59%. The next slide is on the funding mix, and our funding base continues to be very stable, with 84% coming from customers, of which 85% is CASA. So this is a very solid funding base. Cheap and sticky deposits, in a way one could say. I think we continue to increase our borrowings, but really, if you look at it, the customer deposit remains to be our key area for growth and area of focus for us to drive the stable funding source. The next slide is more of the portfolio quality, and you will notice that if you look at it from the cost of risk perspective, is standing at 1.17. That is loan loss ratio, 1.17. Even though we have had up and down in terms of the impairment charge, but the ratio continues to be on the lower side within our expected levels of 2%. If you look at it from the NPL perspective, we have continued to increase our quality, standing at 3% as end of September. But what is also very important for the future, but again for sustainability, is more of a provision coverage ratio. So our NPL coverage ratio sits around 1.01%. And of course, you will notice that our portfolio at risk has also reduced from the levels of 8.3 in 2023 to levels of 7.9. And we have also highlighted in terms of the composition of the ECL by stage. The next slide is on the P&L, and I think much has been covered in terms of the numbers. I think if you look at it in summary, I can just say that we have recorded very solid performance, growth year on year, PBT growing at 21%, PAT growing at 20%, pretty much driven by the solid growth in customer revenue, total revenue, which has grown by 18%. I already talked about the key drivers. If you look there, NFI, non-interest income, growing at 29%, very solid growth there. But again, net interest income by 13%, slightly impacted by the growth that we have recorded on the interest expenses, whilst the impairment charge has grown by 21%. But loan loss ratio has remained on the lower side, and as such, our PAT continues to be the market leading at around 476 billion as at end of September, with solid returns, earning per share increasing. So I think overall, we continue to record very solid growth in terms of the profitability, a reflection of the balance sheet optimization. I think the next slide is more of what we have recorded as far as NII growth, which I've covered already. I think just one thing to highlight there is that if you look at our NIMs, over the time, stable, of course, with a marginal decline. If you look at it from the Q3 2023 up to Q3 2024, moving from 9.52 to 9.45. I think that decline is understood, but again, even if you look at it from the risk-adjusted NIM as well, that has also reduced. I think we have over time maintained it at around above 9.7%. So I think we have been able to protect our NIMs over time, which is a good thing to see. We understand the pressure around interest expenses given the liquidity position in the market, but I think we have put in various initiatives to ensure that we continue to protect our NIMs going forward. On the non-funded income, I've already covered in terms of how it looks like 29% growth year on year, very solid growth, pretty much driven by FX income. FX income has grown by around 84%. But again, there are other non-funded incomes which have also recorded solid growth, including agency banking, including NMB Mkononi, which is our mobile money application, and USSD. But we have also recorded very solid growth on income relating to micro-lending during the period. So overall, if you look at the NFI side, the investments that we continue to make on technology continues to generate revenue to the bank. And as we see it now, the ratio of NFI to total income stands at around 36% against 33% that we recorded in Q3 2023. So that clearly an indication of our success in terms of income diversification over time. Cost efficiency, I think I've already covered so much on the cost side. Whilst our costs have been growing, but we've been able to maintain healthy CIR, improve our efficiency over time. Now, the next slide is more of shareholders value creation and sustainable shareholders returns, and you will see that we continue to record profit, solid operation efficiency. Our balance sheet is well optimized at very solid returns with ROE of around 29%, that as at end of 2023. But again, if you look at the September numbers, that is also standing at around 8%. I think we also remain with a very solid balance sheet in terms of capital position, with capital adequacy ratio standing at around 23%, just to give us a room for any expansion opportunities that we may have in the future. So with those remarks, the next slides are more of historical performance of the bank for the last 10 years, of which I will not want to cover. So in summary, investors and potential investors, the bank has remained solid with steady performance, solid growth, both on balance sheet, both on and P&L, and that is the results for the quarter ended 30th September. We are very optimistic of the future given the macroeconomic environment, the operating environment. We see to continue to be positive and solid, sound. That will continue to provide more room for growth. And we are very much geared to continue to execute our strategy in a very disciplined manner. We understand that MTP 2025 is coming to an end next year, but we have also embarked on the preparation of another term MTP. And as such, let me stop there and welcome any comments? Maybe if there is anything Aziz I have not covered.
No, it's
Otherwise, thank you very much, and we now welcome comments, questions from the floor. Thank you.
Thank you very much, Juma. I really appreciate, I think everybody appreciates the results summary that NMB has accomplished. I think to just summarize, your customer base has now crossed 8.32 million. You're growing at almost 16% CAGR in terms of customers. They're mostly digital. You're acquiring them through the digital channels, almost 5 million in your internet banking and your SIM banking in terms of your mobile banking. And then, of course, what is really amazing about the performance of the bank is an NPL of 3% and a coverage ratio of 101%. Your cost of funding is in line. Your NIMs are quite protected. I think overall, the bank's performance has been phenomenal in the 9 months to the year now, 2024. I think the only issue that I think is a bit glaring is the difference we are seeing in terms of the growth in deposits and funding and vis-a-vis the loan growth. I think I'll start off with that question. What are the bank's initiatives in terms of mobilizing more deposits so that the cost of funding at an environment where interest rates are expected to rise? What is the bank's initiatives in ensuring that its funding sources remain low cost, mobilize enough funding for the growth of the balance sheet?
Yeah. So I think I can cover that now. Now, if you recall, I talked about certain initiatives that we undertake as far as deepening our, driving loyalty within mass and affluent segment. And we have identified certain areas. So one of the major initiatives is the rural banking. And we still believe that there is quite a lot sitting in the rural that has not been tapped. So we have a strategy as far as rural banking is concerned, and our penetration to the rural will bring that money into the formal sector, financial sector. I think the other bit that I also covered in a way, but we have also identified some cash-rich sectors or other subsectors, including schools and religious institutions. So we have certain initiatives to drive penetration in those areas. The other bit that I also alluded to earlier is in terms of, if you look at the wholesale banking deposit has been growing, and it will continue to be an area for us to drive more penetration. And through capacity building, but also delivering the best solution in terms of the investment we are putting in technology, we believe that we'll make these deposits from the wholesale side to be more sticky. So overall, if you look at it, deposit, we understand that challenge. And if you look at what we recorded in H1, we were talking about 7% year-on-year growth. Currently, we are talking about 12% year-on-year growth. All the initiatives and the campaigns that you see across the country, we believe they will continue to generate more deposits from the wholesale, from the retail side, which are more sticky and cheap. So the investment we are putting in people, in technology, to reach more Tanzanians, to drive financial inclusion across the country, we are very positive that we're going to turn around the situation and make it much better. I think the other thing that I talked about, our LDR, if you look at it, including borrowing, it's around 81%. And you will agree with me that the appetite for credit and credit penetration will continue to be on a higher side. And we are very much conscious of that. So we don't just borrow, but if there is a need to do so, we'll continue to support our balance sheet through borrowings. Whilst you have noted that 44%, but comparably, it is probably on the lower side in terms of the absolute terms. So deposit mobilization continues to be the area of focus for us. And I think we are in the right track in terms of the investment we are putting in place to reach more Tanzanians, to bring them in the banking sector. If you look at the customers we've been able to onboard, to ensure all those accounts are funded. Of course, funding may be on the lower side still, but there are certain initiatives that we are working on to ensure that whenever we bring in the account new to bank, it is funded to a certain extent. So, in a nutshell, that is what I can say. Maybe Aziz, if you...
Maybe just to add, Prof, I think you'll also note that this is a phenomenon very known to the market. So I think overall for the industry, we see similar trends, loans growing faster than liabilities. But of course, again, we also know that this market has significant also dependency on physical spending. And I think we've seen some significant improvements on the fiscal space that I think will significantly help to improve the liquidity situation in banks. And of course, we are a great beneficiary of that. And like the CFO said, we have sizable contingency funding lines, I think close to $1 billion that we could tap into if needed. But of course, our priority is cheap and sticky deposits, which continue to push. So I think let's watch the space, but certainly, it's a very top priority for us as far as making sure that we can sustainably, grow our assets. So thank you.
Thank you very much. I think that's quite clear in terms of the growth. I think I'm going to open up for questions to everybody in the chat. Anyone who has a question in the chat, please drop it into the chat or raise your hand so you can be recognized. In the meantime, while we are waiting for questions, I think you've talked about having a strong capital position, having enough capital to be able to sustain expansion. Can you maybe give us a bit of a flavor on the kinds of expansion we are looking at for NMB's future? What is NMB considering as part of that expansion process?
Okay. Yeah, so I think over time, probably this is a question coming, in a different way. Now, we have recorded the organic growth over time, and I think we have started some initiative to look into inorganic growth. We are at the stage where there's background work that has been done, expansion both locally but also regionalized. I think what I can say at this point in time, we will analyze, and look at those opportunities as they come, to ensure that we don't negatively impact the return to our shareholders, to our investors. I think that is the critical part that we are looking at. So we have certain initiatives or other strategic moves that we want to make, but we are doing that in a very careful manner. We will share once we have firmed up some of the activities and how we are progressing, where we think that the capital buffer that we are holding can be deployed productively. So I think that's what I can say at this point in time. But I think it's more of it will be more of inorganic growth. But I think you will also appreciate that Tanzania continues to display huge opportunity, and we will continue. We need capital to continue to invest, even to tap into the opportunity within Tanzania. So we will let our investors know once we have firmed up some facts on the move that we want to make to deploy the capital buffer. Thank you.
Thank you very much. I would like to recognize Mr. Krishnan, Alliance Insurance. Mr. Krishnan, if you could unmute.
Yep. Thank you, Mohammed. And it's always a treat to be with our colleagues at NMB, and they produce magic quarter after quarter, year after year. And I wish that they stay the same. I've got a couple of questions. Let me go back, and I thought uh, I've done an easier job by texting it to you. Probably you've Mohammed, you relayed it back to me. Anyhow, what is the average general rate of interest charged to agri sector? Number one. Secondly, you spoke of financial inclusion and mass bank mass bank account opening. What percentage of accounts of the new banks which you opened are having traction in terms of saving, deposits, mobilization, etc., or most of them are they've just opened it and with not much activity. Then, do you see small businesses, including from villages, etc., are they using your wakalas, the agency banking or wakalas, to deposit money to their creditors, suppliers of goods, using NMB accounts? Do you see this happening? These are the three questions I have. I'll just 1 second. I think I had one more question. Just a second.
Can we probably take all or?
One more thing. You had mentioned that you had to let go in investment in government securities. Is it because there is a funding gap? Yeah, that's all I have.
Thank you very much. NMB.
This question was on the average interest rates to agri.
Okay, thank you very much. So let me try to respond to the questions and then invite my colleagues if there is any additional comment they want to make. So starting with the question number one in terms of the interest rate that we charge to agri, you recall NMB was the first bank to introduce the 10% interest in agri. And so we have a portfolio of 10%. We went even to the level of 9% interest. And we have seen uptake on that. I think that portfolio is currently about 300 billion. So we have been playing with a very low interest rate, 9-10%, for the exposure below 1 billion TZS. Now, you'll appreciate that within the agri space, there could be SMEs and so on with exposure higher than 1 billion and so on. Those are probably higher than 10%. Now, the funding level of the accounts opened, currently we are around 25%. We have around 25%. I just want to confirm. But according to the latest data, we have around 25% of those accounts well funded within 90 days. But again, as I said, given the accounts we onboard, I think the funding is critical, as you've rightly said. So we have various initiatives to drive funding of those accounts. And I said, we are deploying people across the country, we are deploying technology, but more importantly, to reach them and clearly educate. I think the education is very critical. And I hope probably some of you have seen, we have launched our educational program recently, where we want to provide awareness to Tanzanians, to villages, in terms of the use of financial services, the use of formal financial services for them to bring money into those accounts. So I think we are making good progress. I think the first thing on board and then emphasize on funding of those accounts. So I think we are making good progress on that. Whether they are villagers using the agents, yes, they do. I think the growth momentum we have recorded, I think we have identified around 200 villages, 3,000, yeah, where we have been able to have agents in those villages, and we see quite a lot happening in terms of the transactions, deposits, payments to their vendors. I think that is a reflection of also what we have recorded as far as agency banking income is concerned. I talked about the key drivers for our NFI. Agency banking is one of the key drivers. We have recorded very solid growth year on year, and that is clearly telling that people are using the agents. We have actually quite a number of applications in the pipeline as far as agents are concerned that we have to fulfill. And you recall that we even invested to the extent that you no longer need POS. You just need your personal mobile phone, and then you are onboarded as an agent. So I think we're making good progress, and we see quite good traction in terms of people using those channels across the country, even in the villages. Now, the government securities drop year on year 11%. Of course, I had mentioned that given the liquidity challenges, and this is all about balance sheet optimization, where do you want to invest? Yeah, so some of them matured, and then we had not to roll over and to focus on driving the growth on loans and advances. So pretty much driven by the liquidity position that we had over the time. Thank you.
Thank you very much, Yuma. I think we have Emmanuel Matunda. I think he has a question. Emmanuel?
Yes, thank you very much, Professor Same. Thank you, iTrust, for hosting this call, and congratulations to NMB on the stellar results you've delivered for the first 9 months. I had 4 questions. The first one being regarding the escalating cost of funds issue we're seeing happening across the banking sector, including NMB. Has the bank considered refocusing lending to clients such as those in the microfinance segment that tend to rest in a higher interest rate bracket? And if so, could you mention these particular segments? The second question is on the insurance segment. We've seen that insurance, as part of the broader financial sector, has been one of the fastest growing segments of the economy, clocking a 16% growth. How has NMB positioned itself to capitalize on the growth seen in the insurance sector using its bank assurance service? And has NMB considered venturing into fully venturing into an insurance using an insurance subsidiary? The third question is on the NMB PESA campaign. How much has it contributed to the 770 billion net deposits inflow that have been gathered for the first 9 months? And the last question is regarding the interest rate cuts we've seen happening across the globe, and considering that a significant proportion of NMB's borrowings are denoted in foreign currency, could you give a clearer picture on how these cost savings can help ease the growth in interest expenses going forward? Thank you.
Yeah. So let me cover, and Aziz will also come in to some questions. Now, with regards to thanks, Emmanuel. I think they are pertinent questions. I think now the escalation of cost of funding, can we think of lending to micro? I spoke about our Mshiko Faster proposition. It's purely macro lending, where you can lend up to 1 million Tanzanian shillings. Depending on your transaction history, we will assess you on the system, and then being able to lend up to 1 million instantly. I think that proposition is a micro lending that will continue to drive our growth. And I have also even pointed out it is one of the key drivers for the revenue as far as 9 months are concerned. So we already have that proposition, and yeah, we see good traction in terms of its performance, both on the quality, but again, in terms of the revenue generation. But I think, I think the other thing is that if you look at the escalating cost of funding, we have highlighted in terms of how we have been able to protect our NIMs. So that clearly demonstrates how vigilant we have been to ensure that we protect our NIMs. And I think that is a result of what you see as far as the financial performance are concerned on the net interest income. I think the insurance bit, I agree with you, of course. There is opportunity, huge one. We have our bank assurance department, NMB as an agent. We will continue to tap into the opportunities in the market. We understand that is an area where we need to grow. But it is still very potential, huge one. I think the question around whether we want to go with a subsidiary, I may not cover that at this point in time, but remember, I talked about certain opportunities we are looking at to ensure that we deploy our capital in the right places. So that might be one of them. I cannot, discuss into the detail now, but I think I agree with you completely that is an area that we need to play aggressively, given the opportunity in that space. Now, NMB Pesa contribution. So NMB Pesa account, we introduced it, was it early this year? Early this year, and so far I think we have been able to open account around 400,000 NMB Pesa accounts. We understand the market target, purely looking at low income, looking at the mass segment. Now, given the accounts we have onboarded, I think we have only 25% of that funded. And we believe that the initiative we are putting in place will continue to build in and generate more funding into those accounts. So is that proposition or that solution, the account that we introduced very recently, but the traction in terms of the uptake of that particular account is very positive. And we believe that it's an account that will drive more growth in the future. In the medium term to long term, it is something that we will continue to push. In the short term now, maybe not to that extent in terms of the funding, but we see the uptake continues and will continue to drive the uptake and then drive funding of the same. On the red card, globally, Aziz, maybe if you can cover that.
Yeah. So I think on that, I think you're right. So I think what you see, global inflation has largely been won. And so central banks around the world, most of them, except Japan at least, have since done a few rate cuts. We have exposure, especially in dollars. So Fed has so far done 2 rate cuts, 50 and 25, potentially a couple of others, coming. So that is helpful for us because we have borrowings in dollars, and fortunately, as we had structured them, they are all variable. So no fixed borrowing, so which means certainly as the rate cuts happen, we benefit on the other side. But also certainly we expect, depending on how you structured your assets, it also potentially could mean your margins also come down. So, but at least in terms of how you structure a balance sheet on a net basis, that will be positive on our financials. So we can't tell how much but now, but I think certainly there will be that advantage. And also, lastly, we have a pipeline, as I said. We've had to do tactical delays in trying to draw down some of these facilities, again, because we anticipated that this was to happen. And so we continue to play carefully to get the benefit of upcoming rate cuts. Thank you.
Thank you very much. I think we had a question from Mohammed Kara. I think he was actually following up on what just was discussed on the exchange rates, the impact. You talked about the interest rate cuts and the benefits, but Mohammed Hussein Kara is looking at the volatility in exchange rates. Now that the exchange rates, Tanzanian shilling has appreciated or started to appreciate marginally, he was asking how is NMB prepared to tackle any risks that arise from exchange rate volatility?
Yes, so I think it's part of what we do. It's an exposure that we'll always have. Currency risk is part of what we manage daily. Obviously we have risk management guidelines on how we manage our open exposures within appetite. The currency is appreciating, and we just make sure that we tilt our balance sheet as such, so that we also benefit from such moves. So I think we prefer volatility. Volatile markets are always helpful. That's really when you get to arbitrage, as opposed to when markets are really required. So I think the development you see right now are quite helpful, and I think we're benefiting, significantly out of that. And we also using this opportunity to make sure that we avail the much needed foreign exchange to our clients. We've gone through crises, recent months, so this is the time to fix some of those issues that we were grappling with, just a few months ago. Thank you.
Thank you very much. I think I don't see any more questions, so I will end with one question, which has been a perennial issue that comes up from investors when they ask us here at iTrust. And that has to do with two things. One is, will NMB split its shares? Could we see NMB coming to the market and doing 1-for-5 or 1-for-10 splits? So that's a very common question we get. And the other common question we get is, now that the bank is very heavily profitable, ROEs are in their high 20s, profitability is quite high, will the bank look at interim dividends similar to what we see in the Kenyan market?
Yeah, I could cover the share split. I have to say, this is something that we discuss almost every other quarter with the board. So it's not off the table. I think at the right time that could happen, but it's something that we actually discuss almost every other quarter, in the board. So it's something that at the right time we might consider. On the interim dividends, and CFO could add, I think given the things we're looking to do, I think it's probably not something we're considering now. A couple of things could materialize that will need us to deploy, quite sizable amount of capital. So I think it's not, at least in the horizon. We have a couple of assets we're looking at, as CFO mentioned. So at least until we are clear on which ones we want to go for, it's not something that is currently under discussion. CFO.
Yeah, I think you have covered it all. That is the current stand. We need that capital for investment, and there are quite certain initiatives and plans that we are working on. There could be so much capital heavy that we'll definitely deploy what we have as an excess. So I think you've covered it all, Aziz.
Yeah, I think Juma and Aziz, definitely with a bank that is ROE of 28-29%, we investors are quite happy to be patient since the ROEs are so high. So I'll end by thanking again NMB, congratulating the bank for the fantastic performance for the first 9 months of the year 2024. I think the performance is absolutely stellar. The management has done a phenomenal job. I think all investors really look to the bank for the achievement that it has accomplished in the market. So I'd like to thank the management team. I'd like to thank everybody around the table, Yuma, Aziz, Innocent, and everyone else. Thank you very much. And for everyone who joined us for the call, thank you very much and very much appreciated. Thank you.
Thank you. Thank you very much.
Thank you.
Thank you very much.